So let's talk money. Today I want to talk about a common logical error that I see people make, and that is to get hung up on a share price. So what do I mean by getting hung up on a share price? What that means is you might look at a company, in this case think two identical companies, right? Making the same amount of money, everything's identical. But one has shares that trade at $80 and one has twice as many shares, but they trade at $40 each. You don't want to look at a company just on its face and say $80 shares, it must be a great company, it must be big and profitable. Oh, its competitors are only trading at $40. Well, what a crappy little company, you know, who would buy it? Who would be interested in that? You don't want to take the share price at face value as an indicator of the size or profitability of a company. This is because in this case with two identical companies, the one with the lower price, let's say again, remember they're exactly identical, doing the same thing, making the same amount of money, everything's the same. The one with the lower share price, which is exactly half, could have twice the amount of shares outstanding. So their overall market cap would be exactly the same. So remember, you don't want to take signals from the share price alone to decide if a company is big or profitable. Look at the market cap for the total size of the company. So market capitalization or market cap is the value of all their shares outstanding. So if you go back to our example of the exact same identical companies, one with twice as many shares outstanding as the other one, but of course they trade at half the price, their total value of each company is going to be exactly the same. So remember, don't fall into the trap of getting hung up on that price or using that price as an indicator of something that does not in fact indicate. A real world example is you can look at Apple. They did a stock split. So any company can do this for various reasons. I'm not going to get into it in this video, but I believe it was last summer, maybe 2014, June, July. They decided to do a 7-to-1 stock split. So they took, a 1-to-7 stock split. So every share of Apple, let's say it was worth $700 at that time, would then be split into 7 different units. So if you hold 1 share of Apple after the split date, you're holding 7 shares of Apple. Let's say it was worth $700 here, you would have 7 shares, each worth $100. The total value is the same, and the total value of all the shares outstanding, the market cap, remains the same. So remember, don't think that that $40 share or $80 share are indications of the company's overall well-being. You want to look at other things. If you want to look at the size of the company total, the total value of the company really, you want to be looking at the market cap. You don't want to be looking at a single share price. Thanks.